This feels like the quiet before something big, like the calm before a massive storm. Why? Because it looks like the Federal Reserve may have just confirmed a theory we've been talking about. Let's break it down. First, a big headline. Former President Trump said, "Our economy is doing well, but it's going to boom like never before." That's a strong statement. And if you've been following the price explosion before the collapse theory, that quote adds even more weight to it. It's as if Trump is directly confirming what we've been predicting all along. He's not just saying things are going to improve, he's suggesting we're about to see an economic surge unlike anything we've experienced before. So to the skeptics who doubt crypto will skyrocket before a downturn, Trump's words might make you want to rethink that. Now check this out. National debt is looking like it's about to shoot up. Trump also mentioned they're making major progress on what he calls a big beautiful bill. According to him, the plan includes no taxes on tips, Social Security for seniors, or overtime pay. Plus, he's promising the largest tax cut ever for America's middle and working class. His message: it's time for Main Street to come out on top. Make America great again, he says. That sounds like the setup for a golden age. But here's the catch. Before we enter that boom phase, there might need to be a serious crisis first. After that, the money printer comes on. That could explain something interesting happening behind the scenes. Just recently, a top executive, JP Morgan's chief financial officer, sold off $10 million worth of company stock. Why would someone in that position be offloading that many shares? This isn't an isolated event. Across the board, insiders at major institutions, including asset managers, have been selling off their own shares. The question is, what do they know that the public doesn't? At the same time, Jim Cramer is sounding the alarm again. He says a stock market crash like the one in 1987 could be on the horizon. And here's where it gets funny. Cramer has a bit of a reputation, most of the time, like 95% or even 99% of the time, he gets it wrong. So if he's predicting a crash, there's a good chance the market might actually go up. But let's not forget, right before the real collapse, even the boy who cried wolf finally got it right. So while people may be brushing it off, this could be one of those rare moments where his warning sticks. What I really believe is that we're heading into a wild period of extreme swings, up and down. Massive volatility is coming. We'll dig more into that in a moment. Now let's shift to the Federal Reserve. This is where we need to be smart, like 589 steps ahead of everyone else. Because the market, it's always thinking ahead. If we want to stay ahead of the curve, we've got to think deeper and look further. I've been thinking a lot about what's going on in the markets and the broader economic picture, and I want to share where I believe we're headed. If you're ready for this breakdown, make sure to hit the like button and let's jump in. The Federal Reserve has officially decided to keep interest rates steady, holding them between 4.25% and 4.50%. No surprise there, we all saw this coming. Market expectations were already aligned with this move, so it's more or less what we predicted. But here's where it gets interesting. The summary of the Fed's decision might have just confirmed our long-standing theory that a major crisis will hit before the economy experiences a historic boom. Let's go through the Fed's main points. First, they've kept rates unchanged for the third consecutive meeting. Second, they acknowledge that inflation is still running hotter than they'd like. Third, they admit that uncertainty about the future is growing. Fourth, they now see increased risks of both rising unemployment and continued inflation. Fifth, they're watching both sides of their mandate closely, employment and price stability. And finally, they hinted at a growing concern around long-term inflationary pressures. Despite former President Trump calling for rate cuts, the Fed is holding its ground. Why? Because they're openly admitting they don't have clarity on what lies ahead. Their statement, "Uncertainty about the outlook has increased," is a massive clue. Think about it. If they wanted to hit multiple economic targets with one move, the cleanest way to do it would be through a black swan event. It sounds extreme, but it would give them the excuse to act quickly, reset expectations, and shift policies without panic. The Fed is basically saying we're going to wait and see before doing anything. That's exactly what we predicted, and it seems like no one else is pointing this out quite the way we are. This is why it's so important to think ahead, like 5 steps ahead, or as I like to say, 589 steps ahead. Now let's look at what Fed Chair Jerome Powell said in his opening remarks. He emphasized that the Fed is still focused on two main goals: keeping inflation in check and supporting maximum employment. He also noted that despite all the uncertainty, the economy is still standing strong, unemployment remains low, and the job market is near full capacity. But here's where things get real. It all feels like a setup. Trump is urging the Fed to cut rates, but they're holding back. Why? If you look at the tone and language of their statements, it feels like they're planning something behind the curtain. Powell is trying to reassure people, but his words suggest otherwise. He acknowledged that people are nervous, but also pointed out that the real shock hasn't even happened yet. That tiny word "yet" says a lot. It tells us he knows something big might be on the horizon. So here's the pattern I think is unfolding. First, we're going to see a crisis, possibly a black swan event. That shock will be the trigger. Then the Fed will cut interest rates, likely followed by clearer direction and stronger action. And after that, we'll see the economic boom that everyone's been talking about. One unlike anything we've seen before. That's the moment the so-called golden era shows up, just before everything falls apart. Federal Reserve Chair Jerome Powell recently warned that if tariffs aren't scaled back, we could see a dangerous combo of rising inflation, slower economic growth, and higher unemployment. So here's the real question. When the next crisis hits, will they try to pin it on Trump? Powell also made a key statement. Interest rates will come down this year, just not yet. It's another subtle confirmation from the system's top figure. He's basically saying rate cuts are coming, but we're not ready to pull the trigger just yet. And the reason? They're still unsure about what's ahead. But when things start falling apart, that's when they'll know exactly what to do. That's how it's always played out in the past. Right now, the odds of a rate cut happening at the next Fed meeting in June are sitting below 29%. Just a month ago, markets were fully expecting a cut. That's a huge shift. We're about 41 to 42 days away from that meeting, and the outlook has changed completely. Markets currently expect rates to stay where they are by June. Maybe they'll shift course in July. But here's the thing, I believe the Fed will keep rates locked until something breaks. That's the pattern. They'll hold steady until the pressure is too much, and then a sudden shock, possibly a black swan event, forces them to act. You can already see signs of stress. Shorts are stacking up like never before. One whale just opened a massive $70 million short position on Bitcoin. But get this, he opened that short at around $96,000. And where's Bitcoin now? Nearly $98,000 and climbing. That's brutal. I'll break down what I think is coming for crypto shortly, but my gut says we'll see a push upward before anything crashes. Back to that $96K short. If the market keeps climbing, this guy might be in serious trouble. I can't say the exact level where he'll get liquidated, but the pressure must be building. And with a position that size, the stakes are massive. On top of all that, Google just experienced a temporary outage. It's like the whole digital space is buzzing. Meanwhile, crypto's flying, Bitcoin's breaking past $98K, and things are heating up fast. So what's the play now? Let's talk about XRP. Here's what I'd love to see: a strong rally, then a dip to sweep out liquidity, followed by a breakout to new all-time highs.